Welcome to the Defiant. I'm your host, Tegan Klein. My guest today is Noah Seidman, who has an impressive, systematic view on crypto and how crypto fits into the overall macro market. Noah is a technologist with a career spanning 2 decades. He has a unique perspective on the intersection of crypto and finance, garnering him a reputation as a thought leader. While most on crypto Twitter, or Crypto X, are talking about meme coins and the next few months, Noah has been thinking about crypto over a long time horizon. We talk about his macro views, how he chooses to build his portfolio, advice he has for someone starting out maybe in their 20s, and the secret to him staying on top of all of the market news. He understands things like the monetary premium and categorizes tokens in a very interesting way. Before we dive into this, we discussed what Noah is focused on his day-to-day.
When I'm not relaxing, which is most of the time, I keep my eyes on the market to understand where things are. But that's not necessarily what most people think. People, when they hear eyes on the market, they're thinking in terms of price charts. But I have a much larger perspective that I look at, and it's really global macro. And I want to understand where we are in what is commonly referred to the liquidity cycle. And that's what brings me my comfort. That's why I'm calm, cool, and collected.
Yes, your voice is always very calm, cool, and collected, and I'm excited to kind of dig in and chat more. So tell us, like global macro, give us a snapshot. What's happening?
Well, we're towards the limits of where liquidity can become constrained. And in a debt-based monetary system, the global currency supply needs to be expanding. Productivity needs to be expanding. GDPs need to be expanding. We just closed the month, and last month there was a several $100 billion fiscal deficit in the United States. We are spending more than we make, and that is a standard accounting book. Income versus expenses, and the income is in good part measured by GDP, which plays into tax receipts. So in order to balance the books, and that's not just the United States, GDPs need to go up, and they're not going up. So I'm very much interested in watching the stagnation of GDP. At minimum, it's flatlining, and obviously, like dot plots and like GDP now indicators of regional Fed offices, they're stagnant. It's not expanding and growing, and we're getting too tight for too long. The end of the contraction cycle.
And what's causing that stagnation?
For debt to expand, you could refer to it as the easiness of money, and it's clearly interest rates. This is the tightest monetary policy has been in decades, and 5 and change percent in the United States, and that it's not really that expensive in historical terms. So it's obviously a complicated story, and it is always a struggle to present it in a understandable and coherent way. So ECB just cut, Canada cut, the United States is not responding yet because they would argue they want to keep it tight because of public facing the political optics of consumer price inflation. And they will need to cut at some point, but they think they can't cut, but they probably should cut. And this is all just the public story. And I try and put myself in their shoes of what is the behind the scenes story. So the behind the scenes story is probably geopolitical factors and all of those complex types of conversations that we certainly don't have enough information to talk about, and we can only speculate on.
Before we dive into how you fell down this crypto rabbit hole, I want to get into your background. Can you tell us what life was like before crypto?
Well, I still am a software engineer. I program Android mobile products as a professional career for it's 15 years at this point, which means I'm the old man of the Android software development scene. And it's quite enjoyable. It's a skill set that is second nature at this point, just like understanding another foreign language. So never quit your day job is always a reasonable statement, independent of how experienced you are with managing capital. Um, so that is something I plan to continue to do. Maybe less as capital management becomes more front and center, more capable of servicing myself. Aside from the need for employment, you could just get the balance, your work-life balance, a little bit better.
Absolutely. And how did you kind of fall down that crypto rabbit hole, if you will? How did you get started in crypto?
That's been a long time. I bought first Bitcoin at $290. I sold it all at $590. And 16, 17, I remember the frenzy. And the frenzy of 16 and 17 is very much like the frenzy of DeFi summer in 2020. And it will be like the frenzy that's forthcoming when the global currency expansion cycle continues, uh, inevitably. And back then, it was a very different world, very different economic situation, pre pandemic, certainly. And I was younger. And I think often of those years. And you could always wish that you had more experience when you're younger. But in the end, we're all on a journey. And we're always improving the way we understand the world. And that's how I started. And I had my trials and tribulations, my good and bad experiences, and I could even look back most recently to 2020 and 2021 and always say I wish I did things differently. But in the end, I am who I am today because of the things I've done.
Absolutely. You live and you learn. And I think holding is the hardest part. And I've found from friends from back in the day, they got in and they get that psychological hurdle of, oh, I just doubled my money. I'm going to take all of it out. And so I think you're among a lot of people in that case. So I love that you're very transparent about that. Is there anything that drew you to crypto? I guess, you have the trading side, but anything around the crypto ethos or kind of the future that we're hoping for in this world that drew you in?
Well, a lot of this story is probably most recently my evolution from the end of 2021, 2022, 23, and obviously to current. And it's much more so recent technological innovations than pre-pandemic era. 16 and 17 was ICOs, and which is just a capital raise. And there was no substance to what was being created. No, the common word is utility, but it's more than utility because utility is an expression of business, is an expression of a product and a service. And clearly, we're talking about fintech products and services and businesses. There was nothing in 2016 and 2017 and 2018, 19 was akin to where we are with 22 and 23. And everything really changed post 2020. And that really started with Uniswap and the concept of this on chain market, as I call it, which has evolved into a market of markets. And when I say a market, I really mean like a global financial market.
Absolutely. And I think a lot of that infrastructure came together to allow for applications like Uniswap to spin up. But I think we're just at the tip of the iceberg of what's possible.
Most certainly. That it's just an exchange, which is what I would define as an FX market. And then it certainly gets complicated because it's not just currencies, it's derivatives of currencies and which have characteristics of money, which have characteristics of collateral, which have characteristics of equities and bonds for what it's worth.
Absolutely. And have you ever attended a crypto event in person?
Well, I've gone to Bitcoin Miami twice. I Persons that are fortunate enough to have been successful earlier probably attend because they can, and it's a trivial financial expense. You jump on a private jet and you go wherever you want. Uh, I've never done as such, but Miami is a local enough for me to attend most recently.
Amazing. I'll be at Bitcoin Nashville. Was there anything you found about the culture attending an event in person with all the Bitcoiners?
Well, most recently, the things have changed with the names, with persons that are interested. Lynn Alden, and these folks are brilliant macroeconomists and politicians, even more recently. Um, I very much enjoy their perspectives. I am the antithesis of someone who I appreciate the professional side of this industry, and that is much more than a common Bitcoin maximalist would express. There's macroeconomics involved, and this is that type of perspective is required to really understand where these systems are heading.
Absolutely. And I think you have a very systematic view of crypto and how it fits into the macro markets. So can you kind of start top down with macro? I think that we live in an interesting time today, but any big picture views on macro and how crypto fits in?
So fundamentally, I think Luke Gromen nails it as money is an expression or a manifestation or a derivative of energy, which is clearly a talking point, a historic talking point of Bitcoin folk. Um, and I love the way Lynn Alden talks about these topics, and especially her expertise on the history of monies. And I produce derivatives in my own mind to understand these topics. So I categorize gas tokens, Bitcoin, Ethereum, Solana as a money or something that has a property of moneyness, a degree of moneyness. And there's two types of things a person does with a portfolio. They have a cash position, which contains things that can be used for settlement, which is basically things that have degrees of moneyness that can be collateralized and you could access credit against it. And the other part of the portfolio is investments. And from a macro perspective, that's kind of extraordinary because the status quo is to use US debt as collateral because it has great degree of moneyness, pristine collateral. Its face value is going to be paid upon maturity. Uh, but I think it's changing, and it's very much how Luke Gromen talks about it. The biggest bubble has been long-term U.S. debt, which got to basically 0% interest rates at the bottom or the top, and has been going down ever since in the price point as interest rates have been coming up. And I would think very much along the lines of what he says. I think we have higher lows and higher highs on interest rates going forward. So I think the world is very much in need of collateral. The U.S. is certainly going to provide it, as we can see with our fiscal deficit and our capacity and basically need to issue more and more debt out of Treasury to finance our gluttonous fiscal desires. Uh, but the world is wanting choices and options, and I think Bitcoin falls very well into that position. It has properties of a currency, certainly properties of a collateral, um, and that is very significant. Um, Now you could have an entire conversation on Bitcoin versus Ethereum versus other assets with regard to its moneyness properties, but certainly all of those are collateralizable in some form or another within the crypto markets. And then it's important to understand the size of these crypto markets compared to the world, and it's basically zero. The world's a big place, and these markets are small. Um, Hard story to tell, but I guess a decent statement is I think of where we are in these markets as testnet. All of it to this day, even Bitcoin, just the capitalization of Bitcoin at a couple of trillion, it's basically testnet.
And at what point will we hit mainnet?
Well, that's a significant adoption. And bear in mind, that's actually a scary thing to consider, because mainnet implies it's um, disrupting some nation state or another with regard to its systemic usefulness and how it's being consumed. So it's not necessarily a good thing with regard to stability and social rest, civility, for it to become mainnet, uh, quote unquote. Uh, but this journey is interesting no less, because at minimum it's causing entire nation states to respond because it has properties, and these properties, certainly nation states probably want them, but they can't have them because the collateral of nation states and the money of nation states are at the whim of regulatory authorities, policymakers, and the politicians. But that is not the case, at least in the same regard as Bitcoin. You still have governance, and you could reach a quorum of validators and miners updating to change policy, but that is not the same thing as Congress and other political bodies around the world. Uh, so I think they should be envious of these properties of these assets, but they cannot attain these properties.
What Google does for the web, the graph does for Web3. Decentralized apps deserve decentralized data. That's why Web3 is built with the graph. The graph just completed its Sunrise initiative, removing its hosted service and fully decentralizing Web3's data layer. The graph ensures that no one can get in between you and the data you need. Building in Web3, it's easy to power your Web3 data pipelines on the graph and get started with 100,000 free monthly queries. Not technical, but want to get involved? Join the Graph community and delegate to help secure the Graph network. Join the revolution on thegraph.com.
And do you think that the US dollar fiat system is sustainable, or could there be a world, even though to your point it is likely a scary world, where Bitcoin becomes the global reserve currency?
The best thing to state at this point is time. And I think of the time it takes for these types of changes that most people talk about in very short periods is to reference like celestial phenomena, like a supernova or the sun becoming a red giant. They take enormous amounts of time. And clearly, that's just a metaphor. But with the dollar, the structure of the global dollar's use changing, it's like check back in a decade, check back in 20 years, check back in 30 years, and it's changing in very meaningful ways. But the dollar's use for settlement on the SWIFT network is at multi-decade highs, and because of its properties relative to other currencies around the world, it has the most desirable properties, and that will change over time, but that will take a long time.
Absolutely. Well, potentially, we shall see.
But bear in mind, that's scary.
Yeah.
If anything that changes quickly, so that's volatility. Mm-hmm. And persons that trade, volatility is not necessarily what people want. You want stability, you want calm. And that's why everyone, whether you're a trader or investor, can appreciate that in the morning. When you wake up in the morning and you go outside and you're in your driveway or the lobby of your apartment building, if there's 200 people in your lobby and it's volatile, or you're pulling out of your driveway and there's 50 cars that you're waiting for to pull out of your driveway and it's volatile, that's discomforting.
Don't you think the fact that we have traded that short-term calmness, it's almost like a trade, right? We have that short-term calmness because we're playing these games with the monetary policy, but we're sacrificing the long-term for that short-term calmness.
Certainly, that's what debt is. You're pulling the future in future volatility because of the construct is certainly to get more volatile in the future for short-term calmness. We're literally facilitating the refinancing of debt by kicking that volatility into the future, by increasing more and more debt. At some point, it becomes unsustainable. But the scary thing is when you really understand geopolitics, which I am not a professional at, of what strings can be pulled from a political level and a geopolitical, cross currency, which can get violent. And even stories and plans from the WEF. And what do you do when you cross thresholds of entire currency systems failing and the structure of the system breaking down? So it could get very volatile.
Absolutely. And we touched on this briefly, but I want to kind of double click into it. There's always been this dichotomy in crypto between kind of valuing blockchain layer ones based on this underlying monetary premium versus their ability to kind of accrue value from underlying applications built on top of them. Where do you kind of stand on that debate? Why, in your mind, do L1 blockchains have value?
I reduce everything to an investor's perspective. And all of that reduces to the risk profile. So the greater the finality, or the shorter the finality, or the more final the finality, the more immutable the finality, the better the risk profile. So L1 certainly stand out in that regard. Your value, your money is more secure. There is less security with the L2s. Optimism just rolled out some interesting upgrades, so that security profile is increasing, and that is comforting. And then you could, digress into how to respond to these varying degrees of risk consideration. But that's very traditional capital management conversation. It's risk assessment.
Absolutely. Okay. And then we've talked a lot about kind of the monetary policy, monetary sovereignty side of crypto. What are your views on the other side of crypto that's almost less proven that we're working to prove in Web3?
Well, it's big tech. DA, data availability, DePIN, on-chain compute. These are very long-term narratives that have short-term volatility, and clearly we've seen like Celestia was just parabolic out of the gate. But these are very long-term types of technological offerings, and you have to think of target market. You're talking about cloud storage and cloud compute. That's Microsoft and Amazon. So I'm not too fond of allocating capital that far out. I want 2, 4, 6-year time horizons on business reaching some sort of critical threshold. So I think there's many more businesses offered in the crypto space that have a shorter time horizon to more consumption/adoption. I'm very fond of the core pillars of the crypto markets, which is foreign exchange, credit, and derivatives, which is very traditional fintech.
And why is that? I actually take a different approach when I invest, and I take like a 10-year time horizon. So can you just share a little bit of insight as to your why there?
Well, compartmentalize the portfolio. And in that regard, there's no reason not to have a 10-year time horizon. The question is expectations. Expectations are everything, because if you don't meet your expectations, you quickly find disappointment, satisfaction. You question your rationale, and it leads to capital management volatility, self-volatility, FUD. You're like, did I make the right choice? So when you have a structured portfolio and you're able to compartmentalize for different time horizons, you can set your expectations accordingly, and you have to size those positions accordingly. I very much favor many different methodologies, and you could only judge in hindsight. So it takes 10 years to judge a 10-year time horizon from a hindsight perspective. So nowadays, I from an invest, it also requires me to define how I look at a portfolio, cash versus investments, and what I define as an investment. I don't consider Bitcoin, Ethereum, gas tokens as investments. I consider them a money. Uh, so what is an investment is an interesting question.
Absolutely. And tell us a little bit more about your investment strategy, investment thesis, kind of how you look at your overall portfolio.
I'm a very traditional investor. In hindsight, that's what it turns out to be. I am looking for a return on investment over a reasonable time frame. So it's very often for traders they have measured moves, right? And then it's a very short time frame. They're like you have an ascending triangle, and the breakout is a measured move to the upside of 20%. Bull pennant, the upside move is a 30% move to the upside, and you take profits over a week, a month, 6 months. So I do the same thing with regard to cash flow. I appreciate the traditional notion of a business, and a business has consumers and offers products and services. A business has a balance sheet. It has revenue. It has operational expenses, OPEX. So, and that's what really allowed me to refocus almost entirely the way I think about these crypto markets in terms of traditional businesses. And that's what I think the vast majority of people interested in this space don't see yet. Maybe I can't speak for the largest of investors, but how could they not see what I see? A balance sheet on these protocols that are remarkable. There's nothing in all of NASDAQ and all of the New York Stock Exchange that even remotely compares to the balance sheets of these crypto businesses.
Protocol 20 introduces Sorbonne, which is Stellar's cutting-edge smart contracts platform. This creates new surface area for innovation and provides new opportunities for developers to build protocols and products that create access to everyday financial services. So it means a gradual increase in transaction capacity and a chance to fine-tune applications. And it's the most transformative upgrade to the Stellar network to date. Woohoo!
Okay. And, I came across your podcast. I was super impressed in just how well informed you were. I haven't seen you at a crypto event, but I think maybe even more than a lot of people that hop from event to event, which is often how you get that deep industry knowledge. How do you keep up so well with the crypto space? How do you get your news? Where do you learn about all of these things if you're not hopping from kind of event to event to stay on the ground informed?
Anything that's presented at an event is certainly available in the crypto newsroom, which literally is X, formerly known as Twitter. And it's all available. Every piece of information you could ever possibly need to be a great manager of capital is available. And obviously, the only thing I could say for how I know what I know and how I've come to produce these types of methodologies and concepts and these stories that I tell, that's what makes me me. This is the way I think. This is the way I document things, and there's plenty of documents that I offer on stream as well as on our private Discord, and it's just my view on the world.
And break that down for us, maybe for a listener who wants to be as informed as you. They're on Crypto X, but they don't really know who to look at, who to follow, what news to look at. Do you have kind of lists that you engage with, or break it down a little bit?
It's a journey of self-realization, and you have to identify your expectations. You have to understand the world as it is, not the world as people want it to be. The BRICS currency is going to replace the dollar and reserve currency. Okay, great. A lot of people would say, sure, check back in 20 years. That's cool. I mean, I agree. I think there's plenty of better tech. I think the US thinks there's plenty of better tech. I think certainly that the WEF thinks there's much better ways to structure a system with regard to currencies. but over what time horizon? So my strongest encouragement to persons is probably start listening to macro folks. Definitely Lynn Alden, Luke Groman, um, Raoul Powell. Realvision.com is great content to start to understand macro. Michael Howell's perspective is invaluable. But most importantly, after you listen to these perspectives, you have to really assimilate it and you have to form your own opinions. And clearly, myself, listen to my type of thought and the way I think about these things. But then further, you make a derivative of my thoughts and all of their thoughts. And that's the only way to really have have acquired your own perspective on the way the world works. That's the only way to be comfortable engaging with these types of markets. You have to find yourself.
I love that. Very profound, but not just macro, because I've heard you talk about, about the optimism release. I've heard you talk about Arbitrum. How are you staying up with those news updates or release updates?
Well, fortunately on X, when you follow them and they post something, you get the headline. So obviously who you follow is who you become, is the information you have. And that's important. And the last thing you want to follow is, I have compiled a list of the 100 next DeFi gems to go 1,000x on the money. Please look at my list and pick one of them. And so don't follow those guys. Don't follow popular people. Popular people that are excited. You don't want to be exuberant. Here's an interesting one. Finance is boring AF. It should be. It should be super duper boring. It should be watching paint dry. It shouldn't be trying to turn $100 into $1 million. It should be the fact that you can do extraordinary things in these crypto markets that are absolutely impossible in the New York Stock Exchange and NASDAQ. You cannot get 30, 40, 50% on your money, APR, from any of those entities in equities land. But these types of returns are reasonable in crypto markets, which means you're being compensated for taking risk, but you have to understand that risk. So it's quite extraordinary what you can do in crypto land versus traditional finance, and then that's just exciting.
Absolutely. And, you don't strike me as an activist. You're kind of like, let's see what happens. There's no kind of impetus inside of you that wants to join the fight and try and build this future that we're all looking towards.
Oh, it changes everything, and because of the balance sheet that I mentioned. If you look at this crypto market, the credit, and if you look at exchanges as foreign exchange as what it does as compared to a brokerage house, a bank. If you go to an HSBC or a Chase and say, I want to give you $1 million of dollars and $1 million of euros, and please exchange them. I just want 0.02% of the transaction fees and allow people to trade the capital. They would they laugh at you? I don't know. That nobody's ever called them to ask to do that. Maybe if you're another bank or you're like a family office, but you could just do that in the crypto market. You could provide liquidity and have that revenue of the transaction fees, and credit. If you deposit $1 million into Chase and say, hey, Chase, please give someone a mortgage. I want 6% per year for the next 30 years. They would laugh at you. But you can do these things in these crypto markets in a way where you capture the return. So with these types of portfolio additions, you own these types of businesses, which basically means you own a part of a bank. I often say, if it walks like a bank and talks like a bank, it is a bank. It doesn't need to be titled or labeled a bank. it's a bank. So you own a bank, and then that's fascinating, and that presents all sorts of conversation about like the whole regulatory conversation and the whole jurisdiction conversation. And where is crypto? Where is it? Is it up there? So that's a fascinating thought.
Okay, and then what about DeFi Summer? What was that experience like for you? And then what did you learn kind of subsequently in the bear market that followed in 2021 and 2022?
I was frantic in DeFi Summer. I was filled with anxiety, filled with or I was realizing so many things and starting to begin to understand things probably towards not even DeFi Summer. I was clueless in DeFi Summer in 2020. It was like, what is going on Uniswap? What is this? And I had no good ideas in 2020. It wasn't until the end of 21 that and then Curve came online, and the notion of monetary policy, and not just like some relatively trivial token issuance and liquidity, and in hindsight, liquidity was meaningful. What Uniswap was creating technologically, and what I define as foreign exchange, or a foreign exchange venue, which is a bank. But these monetary policies, and towards the end of 21, started to present themselves as quite fascinating. And so some of my first understandings were, oh crap, this is what central banks do. How they increase supply over a period of time, how it's inflationary, disinflationary, deflationary, and we quickly saw like deflationary protocols fail. You can't just decrease supply. It's not necessarily a good thing. Not necessarily a good thing. And it turns out, most interestingly, the most successful monetary policy is disinflationary, where you're increasing supply over time, and that increase in supply is decreasing over time. And what is the most popular cryptocurrency with a disinflationary monetary policy? It's Bitcoin. The supply is increasing every single day of every single block, and but that supply increase decreases on a 4-year cyclical basis. So post 2020 DeFi Summer, there has been an experimentation of every single monetary policy combination theoretically possible. There's been 100,000 years of central bank experimentation done in just a mere couple of years. 100,000 years. So it's been a hell of a journey digesting and really seeing what has been meaningful output of this experimentation.
CK Verify is revolutionizing how proofs are verified, making Web3 networks faster and more efficient. At its core is a modular system designed to decouple proof verification from execution and settlement layers, offloading the heavy lifting of proof verification to a separate network. CK Verify cuts down the associated cost by over 90%, offering huge savings and a more robust network performance for Web3 networks, and it is live on testnet. Visit their website today to learn more.
Absolutely. And where, I guess with DeFi, we call it decentralized finance, but I don't know that it's truly decentralized yet. Actually, in fact, I know that it is not. Where does decentralization fit in your thesis, if at all? And things like censorship resistance, do you care about these properties?
Extraordinary properties. The funny thing is, I am a Bitcoin maximalist, which is ironic, I guess, or many people would be like, huh? So with regard to money and how I compartmentalize the portfolio into cash and investments, Bitcoin has its place. Of any gas token or any collateralizable asset or any asset that has properties, a degree of moneyness, Bitcoin's clearly very significant, and not just in crypto, but to the world at this point. Extraordinary. It's and that plays into risk profile. So if you have a portfolio of money and investments, the risk profile is everything. because your goal is to survive in markets with a structured portfolio that is heading somewhere, which means capital has to survive the currency expansion and contraction cycles. So Bitcoin is imperative to have as cash, but clearly there's a period of time where the dollar is appreciating significantly more than Bitcoin. And all you have to do is invert Bitcoin versus the dollar to see those periods. Now, they're small, maybe a year and a half, but when the dollar goes up 200% against Bitcoin, that's meaningful. So it's complicated because the cash position needs to be treated as like an FX investor would treat their portfolio of currencies. So Bitcoin, Ethereum, gas tokens, you need to be cognizant of the value of the relative value of your cash. On another part of my brain is always thinking about censorship resistance and outside money, as Arthur Hayes talks about. And it's very comforting to me to know that I don't have capital in a commercial bank, that it's portable, and I could do many things that I can't do with the U.S. dollar, be it actual dollars, paper dollars, or bank deposits. There is nothing like the portability of Bitcoin. It's more portable than paper dollars. For a quantity of value, $100,000 of paper money, there's an actual physical size to it, but there is no physical size to Bitcoin. So that portability is extraordinary. And with regard to censorship resistance and that's incredible. That's a remarkable thing, and it must be that much more remarkable to even wealthier persons like billionaires to have that portability. So it's very important, and this plays into like the L2 conversation, and so risk is a very meaningful thing.
Absolutely. And what projects are you most excited about today beyond the ones that you've mentioned so far?
The projects I'm most excited about are the ones that survived 22 and 23. I have interest in new stuff. New stuff has an increased risk profile, max risk, max reward, size the positions accordingly. But the stuff that survived 22 and 23, that's crazy, because the stuff that survived would not have survived in traditional finance. You got these commercial banks are running around with impaired balance sheets if they were marked to market, so without giving a full explanation of the way commercial banking works, these crypto protocols mark to market in real time. So they're literally, their balance sheet, the value of the balance sheet, and frankly, the value of everyone's individual position is valued in real time. There's no hold to maturity concept, and that's crazy. So the liquidation engines that these crypto protocols have created and proven to be resilient in 2022 and 2023, I would say are technological innovations, to say the least. Commercial banking has worked the way they manage their books and do their accounting, but if they just liquidated the balance sheet, they can't, because it's all fractional reserve. In crypto, you're required to over collateralize debt. In the world, it's all under collateralized, which facilitates the capital expansion. So it's really a parallel universe of economics that's really fundamentally based on resiliency, and that resiliency was tested in 22 and 23, and it's even tested to this day by a lot of protocols.
Today's podcast sponsor is Carpet Key. Carpet Key is defining the standard in non-custodial on-chain asset management infrastructure. Carpet Key delivers financial solutions to leading DAOs fostering the growth of the members of their DeFi treasury network, which already exceeds $2,600,000,000 in assets. Carpet Key creates robustness for the DeFi ecosystem as a whole, and they always do it the right way. Learn more at carpetkey.com.
Absolutely. Yeah, as a builder, those were difficult years, but we made it through and, multiple bear markets later. And what advice do you have maybe for someone new to investing in their 20s? Any advice for them?
Time. Time is on your side. If you're 40 years old and I tell you a 12-year time horizon, you could change everything financially, then you're 52. But if you're 20 with a 12-year time horizon, you're 32. I strongly encourage the youth to spend time understanding the way the world works and financially understand the way the global financial system works. And then maybe with your youthful plasticity in those young brains, you'll be like, oh my God, look what they're building in these crypto markets with regard to fintech, with regard to banking, with regard to currencies, with regard to credit systems and foreign exchange markets. It's extraordinary. I am constantly in awe of the real-time mark-to-market properties of the credit markets in the crypto space. And the younger a person could realize that, the more comfortable they would be deploying capital. Like, well, this is a brilliant investment. This is nothing like anything I could buy on NASDAQ or the New York Stock Exchange. And that's a fascinating thing. I often show no coiners. I guess we could use that as a reference. Like some of these DeFi protocol websites. And I so try to put my mind in a perspective of someone that's never seen these websites. And I try and remind myself of like college and younger looking at really shady looking websites. And I can only imagine they definitely appear like, how the heck are they doing this? What is this? How am I getting 500% APR? But they don't understand the mechanics. They don't understand global financials. And that 500% APR is only 500% because it hasn't been diluted yet. And then you have to assess what is the mechanism that's producing that kind of return. So you need to be cautious, young people, of what you're deploying capital to. And that's why like audits are meaningful. But you have to understand the mechanics of how these systems work and how a lot of the protocols that I often talk about in my stream are extraordinary, and it's real business infrastructure that warrants spending of time to understand.
Absolutely, and it's no small feat. Well, with that, you have a YouTube channel. I would love to give you the opportunity to let listeners know where to find that and also where to find you on social media.
I'm Captain Rational. I am the most rational person in these crypto markets, filled with lots of debauchery and mostly insanity.
Degen.
A lot of degeneracy. So I'm on YouTube, certainly, Captain Rational or Noah Seidman, Seidman. You find me on X as well, Captain Rational. And it will just continue to be rational. That's the only way my brain works.
I like it. You can rebrand to anti-degen.
That is the case.
Amazing. And the last question is just, how are you defiant?
It's an extraordinary question for someone such as myself. I literally am the antithesis of the way the general public looks at crypto markets. I actually see the crypto markets as de-risking for my capital. If I think about the amount of capital I have in crypto versus like equities, I would be scared as crap to have it in equities. And I find my comfort, I find my happy place because of the capital being in these crypto markets. And that's maybe the most incredible expression of defiance I could think of. I am outside the system. My capital is protected from the system. My capital is deployed to a market that is accessible to all markets around the world, but of no market around the world. And that's a crazy notion.
Absolutely. And I love that. And I hope many traditional finance folks are listening, or even, people that have all of their capital outside of the crypto space. So really appreciate it, Noah. Thank you so much for the conversation. I really enjoyed it.
Much a pleasure, Tegan. Thank you for your time.
Cheers.